In this video, we're going to talk about my portfolio. We're going to break down the stocks that I have in it, and I'm going to kind of give myself a review of how things are going and if I think I should be allocating my investments differently, because I think that I'm going to start changing some stuff up. So I want to just give you an overview video of what I'm thinking, and you can copy it if you want. Of course, this is not financial advice, so let's get into it. Obviously, not too hot of a day. The market overall went down kind of significantly from what we've seen in recent times, with around a 1% to 1.5% in the indexes. So let's go through some of my different investments and we'll review what I'm thinking towards them. So in the beginning, I just want to break down the different kinds of accounts that I have. So one is an individual account in a Charles Schwab Intelligent Portfolio. This is a portfolio that I recommend kind of as the go-to for anyone that does not know anything about investing. It is the best way to invest properly, diversify, and have an automated way to just keep on growing your portfolio. So in this account, we've got 222,000, and what this does is it basically allocates it based on my goals. So we got some stocks, we got some fixed income, some cash. The cash thing is basically their way of making money. So I wish there was no cash in this because I don't need them to be holding cash. But my portfolio is 80% in stocks. And basically what you can choose in this is your risk tolerance. So I've done pretty much the riskier and more diversified at the same time. So meaning basically a international allocation. So I've got US stocks. I've also got international and emerging markets. And so I'm happy with this allocation. I'm not going to touch my intelligent portfolio. It's a great thing because it just takes money out of my account every month and then allocates it. And it also does it does tax loss harvesting to basically save me money on taxes. So it sells when there's at a loss and then buys a similar asset. And it also just automatically rebalances for me, so I don't have to worry. I also have set up where I have municipal bonds. Honestly, I wish I would just go probably more into stocks. And so this is kind of a more boring section of my portfolio that I'm happy with. I'm not going to change this. Basically what I have set up right now is an automatic transfer of, I think it is $5,000 or $10,000 from my bank account every month, and it automatically goes into this. So I'm going to hold this. I'm not going to touch it. I'm happy with how it's gone. The performance has been, worse than the overall S&P 500, but that's because it's a bit more diverse, right? I've got international, and it kind of sucks that most of the time you're going to lose compared to just the S&P 500, and that's how I invest a lot of my other accounts. So let's go into some of these other accounts here. The next one is a pension trust. So this is one I'm going to actually change quite a bit. I'm going to make an entire video on this one, but basically in this account, let me go to it right now. We have BND Total Bonds VXUS, which is basically a index fund excluding the US, but it's like all world excluding the US. And then VTI, which is an index fund for the US companies on the exchange. So what I've done basically is an allocation of, it's a little bit skewed now, but 60% for the US stocks with VTI, 20% for the international stocks, and then it was 20% for bonds. But of course, the international and the US have been way outperforming the bonds. What I'm going to be doing for my own portfolio, this is something I'm going to change, is, I'm honestly just going to get rid of the bonds. I'm just going to go and move the bonds into VTI. So I'm going to go around 80% VTI and 20% VXUS. There's another ticker from Vanguard, which is the index fund fund company essentially that I use, is VT, which is the total stock market. The thing with VXUS and using VTI instead is that I'm able to control my allocation a bit better, and I'm pro America, in that I kind of trust the American companies the most, in that I understand them the most. We have an international world now, right? It's not like Apple is just an American company, or Microsoft or Tesla. They're selling in China and in South America and all over the world. So I'm going to be moving this pretty dramatically, getting rid of the bonds, and I'll go through kind of a breakdown in a future video. Make sure to subscribe, as I'll talk about retirement accounts, how to maximize those, and what I'm going to be doing. I'm going to be changing quite a bit of stuff up. Next is my individual account. So an actual individual account where I'm buying and selling. We'll start with just like individual stocks. So we got Tesla with 670 shares. This is my biggest individual holding at 400,000 market value. We also have a Robinhood account with another 200,000, mostly in Tesla. So around 600, let's say, with Tesla. I believe that at this price where we're at $623. We've been seeing some solid support at around 600. So I'm really actually happy with this Tesla holding. I'm just gonna hold on. I'm not planning on selling 5 to 10 years. If something dramatically different happens and Elon has a heart attack and Tesla something crazy happens, maybe that'll change my investment plan. But for now, I'm probably not going to be touching this for 5 to 10 years. I was adding in as things were dipping this last few months, adding around at 600, a little bit under 600, a bit over 600. My strategy when something's falling is to basically layer into it. So I buy into it as things fall, and I try to buy more as things fall harder. It's hard to do that, but I buy more shares as things fall harder. Until you basically don't have more money to invest, or you're uncomfortable with the percentage you have in one company. Tesla right now at 600,000 market value is a considerable amount of the portfolio, around 20% of my portfolio. I'm happy with that. That's pretty heavy in one company. You'll see experts say that you want to have no more than 5% in one stock. And, I'm young, I can take extra risk, and Tesla is a company I believe in. So I'm holding strong with that. Apple, as you can see here, I just automatically just reinvest dividends. So there's a weird number here. We've got 100,000 in Apple. I feel like they're really strong right now. We have kind of a super cycle coming of people buying their new computers that have the new chip in it, the M1 chip. So we've got new laptops, we're going to have new Macs. I think this is going to help. We'll see what the iPhone 13 does. But overall, Apple is such a strong player, such a strong brand, such a strong cultural impact. So I'm happy with this. I'm going to stick with this. Amazon is a company that I wish I kind of plowed more in during the COVID pandemic here. That's when I first got into Amazon. So at around $23,000 worth, and now it's at $34,000. So I'm happy, obviously, a 46% gain. Very good, but I wish I kind of put more into it, because that's where I think the world is going. People don't want to go shopping at Target for toilet paper. Who wants to do that? Just buy it on Amazon, have it show up for you, instead of just being awkward in line with toilet paper next to someone. So Amazon is a company that I believe in. They have an amazing ecosystem. That's what Apple is as well. It's an ecosystem. You get sucked in with Apple Watch, with the Mac, with an iPad, with an iPhone, and all of a sudden you basically realize, I just need to keep buying Apple stuff because it's just easier with an Apple device. Everything's linked together and you get sucked into that ecosystem. It just takes one device to kind of get sucked in there. Berkshire is a play that is more of a hedge for me. Berkshire Hathaway, owned by Warren Buffett, is a company that basically owns a lot of different holdings. You got Aflac, you got Heinz, you got Bank of America. They own Apple. But the thing with Berkshire is they do a good job at what I don't understand, which is things like oil companies and food companies and insurance companies. And so what I did was I bought $18,000 worth during the pandemic. It's up 52%. So we're at $27,000. And this is a company that honestly, talk about heart attacks or things happening to founders or important people. I mean, Warren Buffett's up there. I mean, they're approaching 100 years old, Charlie Munger and Warren Buffett, and it'll be interesting to see what happens when they're gone. But their holdings, I think, are something that I'm happy to have kind of hedged my technology plays in, right? Everything else is tech. So I'm happy with this. I will be increasing pretty much in the top 3, Tesla, Apple, or Amazon, if we see a pullback in tech, which is definitely possible. Berkshire has done pretty well for me in a way that, I'm not sure I fully understand if, the company is way better off than it was 52% ago. So I need to do a little bit more research. Rule number 1, don't invest in stuff you don't understand. Berkshire does a great job in investing in things that I'm not super a part of, so I can take my understanding of Buffett and kind of leverage that, but it's not enough for me to have like a major holding in it, right? That's why it's my lowest holding. I've made some other purchases as well. We'll kind of go into those. Here's ETFs. So ETFs are a big part of the portfolio. These are combining, by the way, my retirement account. They're combining my intelligent portfolio. So they're a little bit of a mess, but I'll try to break down what I bought separately. VOO I bought separately. So I've bought 4,000 shares on my own and then 20 shares automatically through the intelligent portfolio. VOO is basically the S&P 500 ETF by Vanguard. It allows me to own essentially the entire S&P 500. And I know history. I've studied the statistics. I know that on average, something like 95% of the time, people are going to perform worse buying and selling individual companies than just buying and holding the S&P 500. And so knowing that and listening to my mentor, I started buying, and we're at 1.2 million, so a market cap of 1.5 now, a market value. So, I've been happy with this, obviously. I'm going to be holding this one probably just for the long run in general. But I think I might be transitioning more to VTI. So VTI is the total stock market. Now, this is very similar to VOO. VOO is the top 500. VTI includes the top 500, and it's market cap weighted. So we do have pretty much VOO is like 80% or something. Don't quote me on that percent of VTI, essentially. But the thing with VTI is it includes some smaller cap companies, some mid cap companies, which historically have done better than the high cap companies, right? If you look at the top companies 50 years ago, those are not the top companies anymore, right? So a lot of those guys are gone. So VTI allows me to capture some of the smaller guys like Tesla, say Tesla like, 3, 4, 5 years ago would have been in VTI. And capture the growth and the potential run-up of those companies. Whereas VOO only adds it in once it's in the S&P 500, which a committee has to basically vote on. And Tesla was only added in when it was at a share price much higher than it is now. And so VOO doesn't see the benefit of that. So I think I'm going to be moving more towards VTI for my overall index fund because it has more diversity, has lower cap and mid-cap companies that have historically done better. Lower diversity, has higher diversification because it includes more companies, essentially. Instead of 500 companies, it includes thousands. VXUS, that's my retirement. BND, I'm basically getting rid of. Right now for bonds, and I don't see the kind of path out of a place where this holding, BND, which basically holds bonds, is going to basically really grow. All right. It holds bonds. So that means it holds long-term bonds, mid-term bonds, different kinds of bonds. So the value of those only increases if essentially the yield decreases. So with low interest rates, You know, I just don't need to have bonds right now. I have gold. Again, very similar. I do not need gold. So I've made a whopping $300 on my gold holding. And I got gold kind of during the pandemic because I was, you know, unsure of how dramatic this pandemic would be on our economy. And then the rest of these are pretty much things that my intelligent portfolio holds. Schwab's ETFs, basically Schwab's version of VTI, and fundamental and small caps and bonds and all this stuff. ARKG is a company that I bought, not really understanding genomics. I can't even say it right. Why did I buy it? Because I thought a lot of smart people were buying it. And maybe it's good, maybe it's not. I did not buy it at a good time. This is pretty much my only loss on my portfolio, I think, maybe except for like my bond allocation, but I've lost very little. And that's a warning to you guys. It's been hard to lose money in 2020, for example. 2021, it's a little different, but it's been hard to lose money in 2020. And so people get a little bit cocky. We see AMC just exploding, and we think that, you know, we can dominate. So be a little careful, guys. Of course, you know, I'm happy with the growth here. This is right on the right hand side here, the returns. So you can see here, this negative one, that's ARKG, that's Cathie Wood. But if we look here, you know, it's hard to kind of lose, has been hard to kind of lose money. So be careful as things have been just kind of growing and exploding and exploding. So those are some of the changes I'm going to be making. I'm probably going to shy away from gold, get rid of bonds, ARKG. Maybe I'll sell that. That way I have some loss, essentially, that I can write off of some of the gains. I'm going to be buying more and more of the companies that are my go-tos, Tesla, Apple, Amazon, if there's a dip and a pullback in the market. As for my pension and basically my retirement, I'm going to be, you know, moving away from bonds and the safer stuff, because I don't need to touch it for years, right? I don't need to touch that for 30 years plus. So it gives you a little hint on my retirement age minus my current age to give you an idea of my age. And yeah, so I thought this might be helpful to you guys to see my portfolio, see a bit of what I'm thinking, and leave me a comment. Let me know what you think about what I've got, and like this video if you do. I appreciate you watching, and talk to you soon.